Alright then, good morning everyone. As we approach PPI today, the first of the major data releases over the course of this week. I say first of the major data releases, we had the UK unemployment rate out a little bit earlier on, which I'll get back to in a minute, but focus of attention this afternoon is going to be producer price inflation out of the US. Now this will be looked at, obviously not as heavily looked at as CPI tomorrow, but we'll break down CPI when we get to it in tomorrow's videos. But PPI and then core PPI. So PPI expected slightly higher over the month of April. Now, if you have a look back to yesterday's video, we did have a look at kind of a few of the lower impact data releases that we had out over the month of or over the last number of weeks. Where have a look at manufacturing prices, certainly from the PMI's perspective. Expected to be pretty high over the month of May. You'll have a look at the services sector, expect to be pretty high over the month of May. And now they are contributing factors to the PPI print. Obviously, they kind of producers. So you kind of think to yourself, if purchasing managers in the manufacturing and the services sector believe prices are going to be high in May, I don't think they're going to believe they're going to be high in May without them being high in April. Just due to commodity prices are off the highs. Economic data is taking a bit of a downturn over the last few weeks. So the fact that they're expecting that to be high would suggest that this probably comes in high too. Consensus of 0.3 for the total rate of PPI, and the core print 0.2. Obviously these are month over month figures. There are yearly figures as well, a bunch of low impact figures which can then skew the number that we get. So we will keep an eye on these releases when they come out, but obviously the main focus of attention is the high impact release when we get it. So you kind of expect a stronger than anticipated print. Now we were just kind of having a talk a little bit on the trade floor a little bit earlier on about PPI and then CPI this week, where interest rate cuts have been largely priced out by the markets, right? So kind of balancing between 1 and 2, maybe slightly above 1 cut priced in, below 2 cuts priced in through to year end. So I just kind of sit there and think to myself, like last month CPI was a bit easier, right? You had economic data was positive, inflation had been trending higher over Q1, your commodity prices at highs. There's a bunch of reasons that we spoke about for inflation being higher at last month's print. This month's print may be a little bit more difficult to kind of work out, we'll say. I mean, you still expect it to be slightly higher, but where does the big move come from, right? Is basically what I'm getting at. If interest rate cuts are largely priced in, or priced out, should I say, through to year end, now does a beat in May or over the month of April, but obviously it's May when we're getting the figure, but over the month of April, does it change that much? I mean, you can turn around and say no cuts through to year end, but a lot of that's largely priced in. So my expectation would be for this to be higher, and then some US dollar strength, some stock index weakness. Now we'll have a look at kind of the way markets have sort of positioned themselves on the way into this. You can have a look at the US dollar just a bit all over the place. You look at your Aussie, Kiwi, Euro. Sterling is a downside today, which I'll get onto in a minute. Dollar Swiss, dollar CAD, dollar yen, dollar yen continues to trend, but rest of them in relatively tight ranges. You have a look across here and have a look at bond yields. Bond yields unsure of what they want to do. They're down and they're up, then they're sideways again. Here they're down, they're up, and they're sideways again. Slightly unsure as to what they want to do. Gold, up aggressively last week, and then down aggressively to finish the week, and had a bit of solid downside in yesterday's session. Gold, which was interesting, kind of the lead overnight, and then sort of chop sideways throughout the rest of the day. Yesterday, you have a look at equity markets flat, futures relatively muted or extremely muted, but markets not really wanting to go one way or the other into the release, which shows that the market is relatively unsure as to what way it wants to go. Now, where you get the biggest move from today, I think is a miss on PPI and then a miss into CPI tomorrow. Do I think we'll get it? Probably not. Like, logically, when you think about it, probably not. But maybe CPI is a bit of a different one tomorrow, but we'll cross that bridge when it comes to it tomorrow. PPI, you'd expect to be higher. Now, do you want to position yourself ahead of the event? Maybe it's a bit of a tricky one. I mean, if it comes in positive, right? If it comes in positive, you want to be long US dollars. Is that a position though that you hold into tomorrow? You could hold it into tomorrow, but is it a week or two longs hold? I'm not so sure it is on a beat. If it's a miss, I think it is. Right? If it's a miss, if it comes in a miss, then you want to be long stocks. In my opinion, you want to be long stocks. And kind of any of these you can choose. Probably S&P and your Nasdaq are kind of the two better ones, as they are. Certainly the Nasdaq is the most sensitive to interest rates, as a weak print should send yields lower. Right, you've got it's a bit of a channel. I mean, not the greatest fan of technical analysis on the on bond yields, but you got a pretty good channel wedge kind of thing here, which you are testing through the bottom. You got this bit of a level that we've got across here at 435. So any break below that should see some sustained US dollar weakness, plus then some equity market strength. If that was to happen, then you'd be looking to play US dollar weakness, right? US dollar weakness would be against the way the market is positioned. The market is positioned pretty heavily net long dollars. The fact that it's positioned pretty heavily net long dollars, again, would be another reason for an unwinding of positions. So I think that's where you get the bigger move from today, is on a miss on PPI. Right, the more realistic move is probably higher, and then that obviously goes the opposite direction, where you're long US dollars, you're short stocks, short bonds, which is long yields. But then where do you look to position yourself on a short print? I think probably look to hold it. Maybe if you get a big move, you can look to close it, take your profit, and then move on to tomorrow. But if you're looking for higher than anticipated print, which would be kind of idea number one, you got to think about what do you pair that with, right? So higher than anticipated PPI, US dollar strength, right? I think the trades of choice, or the trade of choice, will probably be cable. Right, you had earlier on today, you had Hugh Pill from the Bank of England saying that it is not unreasonable to believe that over the summer we will see enough confidence to consider cutting interest rates. That is the reason for sterling selling off in this morning's session. You also had the unemployment rate tick higher, albeit in line with consensus, but did slightly tick higher. So maybe a bit of weakness off the back of that as well. So I mean, it is in line with consensus, so there's not too much really to do there with the unemployment rate. Wages slightly higher, but again, the unemployment rate ticking slightly higher. Again, from the UK. So you're going to be long US dollars. I think short cable is probably a decent bet. Euro dollar. Euro dollar is always a decent bet when you're playing the US dollar. It's also come off a pretty good technical level here up at 108. You got this trend line, going back since pretty much since the start of the year. It's held a number of times. Did reject that in yesterday's session. Coming off these highs posted on Friday the 3rd of May off the back of NFP. So since then you've been trapped in a relatively tight range. You're coming off a pretty good technical level. Euro dollar, if you're playing some US dollar strength, is never that bad an idea. But cable's probably your trade of choice. If you're talking weak PPI, I think you're long stocks. I mean, that's what you're looking for. I think long stocks, and then look to hold stocks if you can. But again, if you get a big move off of it, you're probably best off taking your profit and reevaluating the situation into tomorrow. So more likely outcome, PPI. The slightly better outcome probably would be a miss. The more probable outcome would be higher PPI. The slightly better move, I would say, probably comes from weak PPI. Is it a position? Is it a release you want to take a position into it? Previous releases have been releases where taking a position into it is probably a good thing, or has proven a good thing over the last number of weeks. But I'm not so sure this really is the same thing. So there's your options. They're the assets to hit. Probably a bit of a wait and see how the number comes out type of number, and once we get that, even if you don't look to trade it, can give us a bit of a clear indication into tomorrow. Maybe you can position yourself ahead of CPI, but again, as I said, we'll cross that bridge when it comes to it. So we'll get through PPI today. There are a couple of options. I know it's a bit of a wishy-washy analysis where you're saying, could go long here, could go short here. Not my favorite type of thing to say. I prefer to take a clear bias, but again, no point taking a clear bias if you're a little bit unsure. So again, positive PPI I don't know if positive is the right word, but higher than anticipated PPI, probably the more probable outcome. If you're going to position yourself ahead of that, probably position for that, but also then watch how the data release comes out. Weak PPI, I think, along the S&P or the Nasdaq. Strong PPI, probably short cable.